Well, it's time to meet our next founder who has been busy raising as well. And Futurerent, founded by a senior Deutsche Bank exec, has just raised $9 million for landlords to get paid in advance. The company gives property investors up to $100,000 towards rental income so that they can use it to do other things. And the plans for Futurerent are now to roll out nationally. We're joined by founder Godfrey Dinh right now to tell us more. Godfrey, great to have you on the show. Congrats on the raise. One of the fascinating things I think about Futurerent and your customers is that these are people who aren't necessarily cash poor and need the money up front. They do have the money in the bank account, yet they choose to use your service. Why?
Yeah, thanks so much, Simon. Great to chat with you. So, I think the key thing for us is a lot of our clients, they're just after a better experience. They want to preserve their savings and they want to access capital to keep growing as an investor. And really, what we're doing is just giving them the option of doing more with their rental income.
This works. Are you disrupting the real estate sector in the process, or are you complementary to what they do so that they're getting their percentage, you're getting yours, and of course the landlord is happy along the way?
Yeah, we're really working with the industry. We're not disrupting the real estate industry at all. Very much so, when our clients grow, the industry grows. So we're helping people buy more property, invest in renovations, invest in any other areas of their life or any other opportunity really. But we're just helping them get, that rental income up front so they can turn that rent into investment capital and, as I said, do more with that rental income.
Godfrey, what was your road to Damascus moment? When did you go from sort of being, a high-flying banking exec to deciding to being startup founder? What led you down this path?
Look, I sort of initially actually left Deutsche looking to just do my own property investments and looking to really just build a sort of property business. And the biggest issue that I found as an investor, even with the experience and sophistication that I had, was accessing capital to keep growing as an investor is very challenging, right? It's such a long-term game. You invest, your money for 5 to 10 years, and you sort of tie that up, and you're really burying it and hoping that in the future it will plant a seed for capital growth, and you're going to be able to benefit from that in the long term. But then when it comes to being able to access money for a renovation or access money for another deposit or any other area of your life, it's very challenging, right? I think that investing in property is really the most tried and tested way for people to create wealth in Australia. It's a $10 trillion market. It's 3 times the size of the share market. It's 3 times the size of the superannuation market. But access to capital is the biggest barrier that property investors face. So I sort of realized by giving property investors flexibility with that rental income, we can really help them with the money that they need to plant the seeds for their financial future.
So I'm fascinated by this and the relationship with the bank, Godfrey. I get my $100,000 up front in rent, so I'm drawing my cash flow forward. Does the bank then accept that as the deposit on the next property if I'm looking to invest in further properties? How does it work in terms of servicing existing mortgages and then, of course, acquiring more properties along the way?
Yeah, so just to give you an example, most investors, they get, say, a year's worth of rental income in advance, and they pay that back over 3 years from a third of the rental income. So that way they're still keeping 2/3 of the rental income, less our cost, but they're still keeping over 60% of the rental income to cover any of their existing obligations and expenses. And we're really, just giving people that flexibility so that they can do more with their rental income, but we're allowing them to make the decision around, how much of that money they really need to continue to sort of meet their obligations. So, key difference with us is we're dealing with a really financially responsible group of people. Property investors are very different to most of the clientele in the sort of conventional fintech market or a lot of the other people out there in this sort of business. And it's all about wealth creation. It's about people wanting to get ahead and wanting to invest in the future. It's a very discretionary thing. So we're really just giving them another tool so that they can keep growing as an investor.
So the $9 million round was led by OIF Ventures with several other VCs backing it. The plans are national expansion. Tell us where you are at this point in time and where you plan to be in 12 months.
Yeah, so we've had a really great year. We've sort of 10x the size of the book over the last year, and we're growing really, really rapidly. So, but we're still only servicing a very small part of a very, very large market. There's $48 billion a year in residential rent that's stuck in monthly or weekly rent cycles, and we want to expand our national presence and really invest heavily in technology to make sure that we can address this market at scale and deliver an incredible experience, not just for the property investors that we work with, but also to help a lot of the partners that we're now working with deliver a world-class experience for their clients, so they can use Futurerent to grow their property portfolios and as a result grow their businesses as well.
Godfrey, do you see Futurerent as a global fintech, or is this a uniquely Australian solution to a uniquely Australian approach to investing?
Well, I think property is big everywhere. I think if you look at markets like the US, if anything's sort of investing in property is I think ingrained in their psyche as well. I've spent time in the US buying investment properties myself, and I think that they face a lot of the same challenges that we face. If anything, if you look at a market like that, people probably place more value on the improvements rather than the land value. Here, people probably place a lot of value on the land value as opposed to the improvements. So, flipping as a result, say for instance in the US is therefore a much bigger thing, and access to growth capital to be able to really do that is really critical. So I don't think it's a uniquely Australian thing. I think that generally we're following a broader trend in financial services, which is around the customization and personalization of financial services for a group of people that, where you're delivering them a better service that's better suited to their needs. I think really across the board, the banks generally are built for homeowners, right? And for very general purposes. And property investors have largely been neglected as a group of individuals who have specific needs, who are really, everyday Australians. There's over 2 million property investors in Australia. So it's pretty much 1 in 5 households have an investment property. And as a cohort, they've generally been overlooked and, if anything, deprioritized by the banks. And why we have a business is we're giving them a better experience and giving them what they want when they want it in a way which they would like to access it.
Given the interest rates the banks charge to investors, I'm surprised that they have overlooked that opportunity. Finally, Godfrey, I do want to ask, because in some ways you are on the front line of what's happening. We're going through an interesting time in the property cycle yet again. As you have these conversations with your clients, what's the sense of the pulse of Australia's property market at this point in time?
Look, I think that property investors at the moment, they're still in really, really good shape. If you've invested in the last cycle, you've really had a dream run. Interest rates have actually been coming down, and obviously now they're slowly coming back up, but they're coming back up off of a very, very low base. If you've bought in this last cycle, you've experienced good capital growth, you've experienced strong rental growth. That rental growth is really offsetting the increasing interest rates that most investors have sort of have had. Nationally, the vacancy rate is sort of around 1%, and rents have been increasing by about 10% nationally, across the board. And if you look at some markets like Canberra, for instance, rents are up 17%, and you can still buy a unit there for a yield of sort of 5.7, 5.8%. So it's still very easy to positively gear property right now. And if you look at how property performs in an inflationary environment, generally it's a very, very good bet. So if you can buy a cash flow positive generating asset in an inflationary environment with the benefit of leverage, it's actually very, very hard to beat. So the sentiment that we have from our clients is they're still seeing a lot of opportunity. A lot of that opportunity is sort of more general in nature, and then some of it is more specific around, you know, certain areas where there has been quite a lot of rental growth, and there's quite a good opportunity to be able to buy property that has benefited from this, you know, rental growth more recently, and bring that property up to scratch to the point where you can actually realise the full returns that are available. So on the whole, I think, you know, property investors are still quite bullish.